Hey, welcome back, everyone. I've got a really great strategy for you today. And this one is really great because it accomplishes multiple things. This doesn't just save you on taxes, but it also helps teach your kids some financial independence because school oftentimes doesn't teach this. And then lastly, it can also be a great way to transfer wealth slowly over time without having to use gifting exemptions. So what this strategy is if you have a business and you need help with something in that business, you can pay your kids up to a certain point without them being subject to tax. So you could actually get a deduction for your business and not have your kids pay tax on it. So how this works is, these are personal deductions that everyone on their individual tax return gets. So a standard deduction is just a flat dollar amount based on your filing criteria, and it is indexed for inflation each year, meaning it likely goes up every year. Or there's an itemized deduction, which is where you're allowed certain personal expenses like medical expenses subject to limitations, personal property taxes on your home, property taxes on investment property, state and local taxes, charitable deductions, and a few other items. But you would add all that up and you would see if that is more than your standard deduction. If not, you just take the standard. For 2023, the standard deduction for a single taxpayer is $13,850. So if your child is unmarried, which I'm assuming they're under 18, they're a dependent, they get that same exemption, $13,850. And that means if their income is that amount or lower, they actually won't owe any tax and probably don't have to file a tax return, okay? So what you do is you hire your child to do something that you need. Maybe you need help with the marketing on social media. Maybe I've even had clients in real estate that paid their kids to do miscellaneous maintenance around the properties. Maybe they helped with landscaping or taking out trash, things like that. And so they would pay their kids, and as long as it was below that standard deduction, the kids didn't have to file a tax return. Now, an important tip to remember about this is sometimes they make a mistake of withholding taxes on those payments. And then what that means is that sometimes you now have to file to get that refund of money back since you didn't actually owe anything. So make sure if they're going to make under that standard deduction that you don't withhold any taxes so that you don't waste time and additional money filing to get that refund. Another important thing about this is you need to actually put them on payroll, okay? Meaning that if they're an employee, then you are putting them on the monthly or bi-monthly payroll and they're getting a W-2 at the end of the year. Otherwise, maybe they could be classified as an independent contractor, which means you would 1099 them. So those are two different things, but most of the time your child is probably going to be a W-2 employee. And we could talk about the differences between an independent contractor and a W-2 employee in another video. Let me know if you're interested. But for this purpose, let's assume they're a W-2 employee. Well, you actually have to issue them the W-2 so they're actually treated as an employee. The other important thing to remember is that standard deduction is for earned income. So earned income is things like wages or commissions or tips, all those things from essentially actively working. So if you pay them up to the standard deduction amount, but then they also maybe have a small savings account or something with what we call unearned income. So this is like capital gains, interest, dividends, those types of things. If they have that in addition to the salary you're paying them, then they may be subject to tax. So it's important to know the difference between those two. Watch out for rules on states because every state is a little different. Most of the time, if they don't have to file for federal purposes, they won't have to file for state purposes. And I look forward to seeing you in the next video.